Welcome to FOMO Consulting for your daily AMC stock analysis video on Tuesday, July 13th. Ladies and gentlemen, we are in a test of wills. Who will blink first? And as always, the apes are winning, diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I would appreciate the support. Let's get into the video. Thank you to each and every one of you who has liked, shared, commented, and subscribed. It means the world to me. Thank you very much. Start with a quote. I believe in one thing only, the power of human will. We are certainly having our will tested. The diamonds in our hands are getting harder by the day. To maintain the momentum we have, obviously the levels of support they are trying to break is certainly a test of wills. So let's take a look at the broader market overall. Blood red. The CPI report came out and pretty much the market tanked from there forward pretty much. The S&P was down 15, Dow was down 107, NASDAQ down 55, and the Russell was down a very large 42, nearly 43 as you can see. Pretty much tech is the only thing, surprisingly, that actually did well today. Everything else was pretty much in a sell-off mode. So overall, not surprised AMC had a struggle as we look at the Russell 2000 very shortly. As you can see, crypto selling off yet again, having a rough time lately. Certainly Bitcoin, Doge is down below 20 cents at the time of this recording anyway, which is surprising, but overall, again, just a lot of volatility as we all know over the last several weeks. So let's look at the after hours last night in pre-market. Again, take it with a big old grain of salt, but you can certainly see what they're trying to do. They're just incrementally with the algos, just walking it down ever so slowly, dollar by dollar, penny by penny to get to where they want to get it. So we started around 42.80 last night and ended up right before market open, right at $40. And as you can see, after hours, at least at the time of this recording tonight, they have done so yet again. They just continue to walk it down. And let's be honest, folks, there are some people selling, no doubt. Some people are just folding up and just taking their profits. Not everyone is a diamond hand, right? Overall, as you can see in Germany, down 10% today at 33.03 euros. Again, they had the big sell-off, as you can see, no different from us. So let's look at today's action. We were down $3.09 or 7.28%, down to $39.35. After hours, we are down an additional $2 or so. Again, like I showed you, they're just continuing to try to keep walking it down. But unlike the last couple of days, we actually followed the weakness in the overall broader market of the Russell 2000. As you can see, we pretty well followed it almost identically. Surprisingly enough, we did have higher volume today, but no doubt a lot of that volume was related to selling, unfortunately, as you can see. So what I want to show you now is the IWM chart from today. As you can see, obviously it's an ETF tied to the Russell 2000. You can see it followed it nearly identically. And one thing to keep in mind is, this article came out this afternoon. Russell 2000 traders placed bearish bets on IWM ETF. Keeping in mind, IWM, at least identified in this article, and it is correct, the last 6 months is pretty well traded sideways. AMC has been the outlier, or one of the outliers that has ran up substantially, but AMC is also one of the largest weighted holdings within this ETF. So when it gets pulled down, we generally get pulled down as well. So what I want to show you here is the 1 hour chart going back for an entire trading month. As you know, we hit that $60–65 range, got knocked down overall since that point. Let's just call it around June 18th. We pretty well bled down. But if you look at the overall broader market regarding the Russell 2000, which is below, you can see where we, for the most part, except for earlier in June where we were running up and had a lot of bullish price action, a lot of volume, we've pretty well followed that trend down. And as you can see over the past month, the Russell is down 87 points, which is pretty big for the Russell, 3.75%. So overall, as you can see, we do rely very heavily on the broader market of the Russell 2000 for our intraday success, especially when we do not have heavy buying volume, right? So let's look at the 15-minute chart. As you can see, this goes over the last really month or so. You can see where we got to that $65 level, and it's just incrementally bled off ever since. One other item to note, if you look, the red line on the RSI indicator is pretty much the neutral zone. As you can see, they've really pressed us down below that neutral area for a substantial amount of time, again, especially for the last couple of weeks, you can see where we've struggled really to get above neutral, at least on the 15-minute chart, for quite some time. And as you can see, we've spent a substantial amount of time on the bearish side of the MACD as well on this particular time period. Let's look at the 1 hour. As you can see, that $40, $38 level of support is absolutely critical. I believe they are trying to erode it each and every day, each and every minute. They're trying to press us down. And the fact that we've gotten to this area yet again and we did not bounce, my hope is tomorrow we will bounce and have a bullish run to get away from this level of support. You know, after hours, take it with a grain of salt again that we're trending below that, but we'll see how the intraday goes. I wouldn't put a whole lot of weight into the pre-market in the morning, but you can see where they, in my belief, they're trying to break the chart. They're trying to get this below support. And at that level, I believe they're going to try to get some of the whales to sell off, you know, capitulate and try to help their cause. So again, what I want you to see is the amount of time on the 1 hour chart we have spent over the last couple of weeks pretty much below neutral. It's a substantial amount. I think we can all agree that it's probably being manipulated in some capacity. However, there is hope. If you look at the RSI, again, we are down in very oversold territory on the 1 hour chart. But as you can see, some of the bearish selling volume is starting to dry up. The MACD is starting to kind of curl around. We are nearly touching the signal line at this point. My hope is that this bearish run is coming to an end very soon. I'm sure you as well. And we may very well see a bounce tomorrow. Again, let's look at the chart on the 2 hour time frame. Again, that level of support around that $38, $39, $40 level is absolutely key. The last few times we've touched it, we've bounced. Hopefully tomorrow we will see a bullish bounce. And again, as you can see, you know, if we break down below that, again, you may see some additional sell-off. It's hard to tell. It's just my personal hypothesis, but I believe they are trying to trigger some of these algorithms to potentially help them in their calls, to help a sell-off so they don't have to expend so much money and energy, right? And again, as you can see, the MACD and RSI are very low, and they are poised for a bounce, in my opinion, very soon, but we shall see. And again, even on the longer term time frames, we have spent a substantial amount of time below neutral on the RSI. We shall see how this plays out. 4 hour chart, no different. Again, trying to break below that area of very substantial support. Hopefully we bounce. If you take a look, what is substantial and important, in my opinion, on the longer time frames, especially on the 4 hour, we are now substantially in oversold territory. MACD continues to bleed down, as you can see. Really, since the big run up, they've been just walking this down incrementally. But if you look at the same general time frame on the 4-hour, the last time we got down to this level, as you can see, was before the mini squeeze. We started the bullish run. So again, I think there's hope. There's light at the end of the tunnel. I think, hopefully the bearish selling will kind of calm down. We can start a bullish run again. But I think a lot of it's going to depend on how well we hold this level of support. One last look. This is on the daily chart. Again, heavy level of support. They are trying to break it. And as I showed you yesterday, you can make an argument this is an inverted cup and handle pattern, which is bearish. Again, the MACD and the RSI have been pressed down into oversold territory. Hopefully, we'll get a return here in the next day. So let's look at the daily chart again on a longer time frame. Alligator's mouth is now closed, but he's just chilling. We are not in bearish territory quite yet. Again, the level we are currently at on the RSI, as you can see, every time we've pretty much been around and touched that area, we have bounced. We have had a bullish price run, as you can see, before the mini squeeze back in late January. Again, in mid-April, we had a 3 or 4 days in a row of green price action around 5% per day. Again, this is when we broke or started to break that heavy level of support around the $14 range. And again, we are at that level yet again. Hopefully we can bounce. Hopefully this is what the chart will look like tomorrow for GME, which will help AMC. As you can see, tomorrow is a huge day for GME. Hopefully the NFT, all that turns out to be a very bullish catalyst, not only for GME, but also AMC. So again, if you're in GME, I'm sure you're anxiously awaiting it. So let's see how GME did today. Very similar to AMC, been getting bled off, down $9.19 to $180. Again, still at a level of support, but again, they're trying to break GME as well. So I know this was a big deal, kind of floating around. I kind of saw as I was doing some other things today. JP Morgan warns hedge funds to expect intraday margin calls. This is the only article and the only place I can find it, much like most of you, right? However, be careful because, go figure, one of the more recent 13F short interest filers is, go figure, JP Morgan. So again, coincidence, not sure, we'll see. So I know there was a lot of buzz around the Vortex recalibration. You can certainly see the trend data has fallen off just a bit. Nothing fundamentally has changed regarding the squeeze itself. We are currently around 15%, so still very substantial and on the high side. 40 days is the current average age of short positions, so this keeps incrementally increasing day by day. What is substantial is nothing, again, fundamentally has changed because shares on loan is still at 99 million. Cost to borrow is going up just a bit since yesterday. Utilization keeps kind of trending up. We are about 92% now. Short interest again, 15.39%. They did borrow 2 million shares and returned 2 million. So they used them while they had them, and the short shares available according to Fintel, 400,000. Volume again was up versus the last couple of days to 82 million today. We have been institutionally owned around 430. We have dropped one long position from 390 to 389, now at 429 total. So again, we still have a lot of whale support, but one did drop off, which I'm not sure who that was or how big. That may have contributed some of the selling pressure we've had over the last few days. The one thing that kind of opened my eye was, just the overall price action. A lot of open interest at the $20 strike on the put side. Certainly very bearish bets. But as you can see at the $30 level, again, with a lot of puts. Again, at the $35 level, a lot of puts. And at the $40 strike area, again, a lot of puts and a lot of calls starting to accumulate. This is expiring this week. But again, there's some concern for me that there's a lot of bearish money coming into this, as you can see. So overall, we will see it. But again, this is a test of wills, right? So let's close with a quote. Fulfillment is through will, not through a wish. We certainly wish for the squeeze, but fulfillment is through will, and this is a battle of wills. Make no mistake about it. Yes, they have more money. Yes, they have more tools. But the one thing we have is human spirit. We have diamond hands. We are the apes. And again, do what's best for you. I cannot give you financial advice. I'm not a financial advisor. But again, I believe the human will in this movement will overcome the money and the resources our opponent has. So I want to thank you all for watching. If you found the video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I appreciate the support. But again, I hope your life is full of green candles and you have a wonderful evening or day. Take care.